Okay, now we're on. Ladies and gentlemen, welcome to the Superlative Podcast. I'm Edward Bushi, one guest, no edits, no post production, just a sharp live conversation about what it really takes to reach higher levels and what comes next. And let's get into it. I want to introduce Mike Ma from Sidecut Ventures. He sits shoulder to shoulder with founders for 30 days with live customer acquisition before writing a check, because 30 days of trying to grow a company is one thing a founder can't fake, and I'm really excited to dive into that and how you got into that process. But before we start, could you give two sentences about Sidecut Ventures and a big welcome to the show?
Thanks, Edward. It's a pleasure to be here. Yeah, Sidecut Ventures, we talk about our thesis. Our thesis is coachable superheroes, which are two words that are weird to mash together. And since you talked about the 30 days, I'll speak about the coachable part first. That's how we underwrite our companies. Coachable, we work with all of our founders for 30 days, like you said, about our customer acquisition and go to market or something on the front end. It's where we're strong and can help people and learn a bit something on the way. Superheroes refers to impact sectors, and we are really proud impact investors. We want to back founders who are building things that are good in the world. And we're pretty open about it. If you go to our forum, sidecut.vc/pitch us, you'll see one weird question. Well, two weird questions, but the second one is describe in your own words what evil you're fighting in the world. And we've backed companies, anything from economic mobility, climate, education, healthcare. We've looked at a couple. We've just made our second disability tech investment, and whatever helps the world and is still also going to be in the unicorn status, we're really interested in backing. So that's our firm, Coachable Superheroes.
Yeah, and it means a lot too, right? Because folks are in that area are going to be high conviction, so that must be a good signal to look for too. So
we're completely. I mean, and it's funny because a lot of people think impact. They hear impact, and I had a lot of investors who think this is some sort of concessionary strategy. I love that you hit it. It's quite to the opposite. That like impact means higher returns, not lower, because we think founders are the ones who, when all the chips are on the line, and I know we're going to dig into a lot about like this whole idea of startups or war. When you're in the trenches in war, like the ones who are fighting for a mission. We think are the ones who are going to be on the other end of it, more successful than not.
Yeah, totally. So before we get into that topic, I want to get into your origin story, your backstory, right? You describe your bio as being in concentric circles, 4 starts, 2 exits, and 2 dumpster fires, right? So this is what laid the foundation for how you guys like operate at Sidecut. Would you like to like talk about that?
Yeah, sure. Happy to. We think we've been well. My life, and we is the imperial we, been through many parts of lives, and I think at the core of our firm is empathy. So it starts with the founder. So look, I've sold a couple businesses. I've raised money. I've also lost money. And I think it's an important discussion to have with the founder to understand what it looks like to raise a fair amount of money and look at your investors and say, I'm sorry, it just didn't work out. I'll do better next time. And I think those are important parts of understanding all parts of the founder journey that are part of it. And that concentric circles, that's the center of it when we talked about it. On the next layer of that circle out, I've also been the first chief marketing growth product or type of officer. And I think that's important from a founder perspective when you're an investor, because I've been the person that you would use a capital round like me to go hire. So effectively that sort of is an interesting way to look at the world, where not only I've been a founder, but I've also been on the other side of the table. It's like, hey, you raise $1 million, $2 million, you got to hire some people. And I've been that person at companies like Betterment and OwnUp and other exited fintech startups. Has sort of been my view. And then the last concentric circle, I've on the operating end, I've had my big corporate jobs. I ran digital strategy and innovation at Bank of America for the U.S. consumer business. I ran advertising at Vanguard. And I think that's important because at the end of the day, you're either trying to sell to these large enterprises or be sold to or have to work with or collaborate with these large enterprises to understand what it feels like at scale. And they're all different, as you know, they're like different they're different races, they're different speeds, they're different tenors of actually operating. And I've luckily been able to be on all sides of it. So when we work with a founder, we'd like to think that we can offer a little bit of small, medium, and large, and understand all different parts of the founder journey and the operating path that startups need to succeed.
Yeah, and like it's quite a journey that you've had, and now you're working with um, startup founders, and like you essentially like can fill in a lot of gaps inside the team. But like how does like one someone like you, like it seemed like you have a marketing background and a little bit of a finance background, but then when you're working with startups and you're helping them out, it seems that you can do a lot of jobs in between. Is there something about those tasks? Like how did you get
Sure.
into them? Right? Yeah, and
Sure.
that you can be so flexible. That's very interesting to me.
Sure. The answer is the things that we're good at are something on the customer end. Could be revenue, could be marketing, could be sales. How did I get into it? My first job was at a tech company called Trilogy Software. They hired me out of school, and they let new college hires try everything. And I thought I wanted to code. I'd never touched code in my life. So this was 28 years ago. The joke is,
Oh, that's a long
I
time
checked
ago.
in my
Yeah.
first. I know I'm old. I checked
No,
in
no,
my
no.
first
I
line of
mean,
code.
yeah.
It's okay. I checked my first line
Yeah,
of
yeah.
code, but the guy who was leading my team said, "You code like a marketer. Why? You should try marketing." and that sort of has been where I've been in tech since. So it's being aware of the tech, but my strength and my I'd like to think my superpower, or at least my calling, or what I enjoy is on. I like revenue, and I actually people always think about revenue and customers, and I do think there's two primary weapons. One is sales and one is marketing. I've been fortunate enough my career to do both. So,
Mhm.
and I see a lot of similarities between, whether you're doing large enterprise account sales or look,
Yeah.
I ran advertising at Vanguard, and I got to spend more than, a mid 8-figure budget sending ads and building digital acquisition funnels and early in my career. So
Yeah.
I kind of view them the same. And that's what I enjoy. And that's what I can sort of help founders with, regardless of what they're trying to, however they're trying to, it doesn't
Yeah.
matter what you're building.
Okay.
Climate, AR, VR, blockchain, fintech, prop tech, whatever. You need customers. You
Hmm.
need customers. And that's what we're good at. And if it's sales, we got
Yeah.
you. If it's marketing, we got you.
Mhm.
If it's product-led growth, we got you. Like those are the things that we tell every founder and why you should work with us.
Gotcha. And like in from how you like started helping like teams out, right? Um, what have you noticed founders like making mistakes in similarly? Because you must have like noticed this some kind of like pattern or attitude with founders, and we're like, you know what, this is our niche. Let's help folks out.
Yeah, I mean, I think that look, they're all founders are world class athletes. Even the ones like
Mm,
to like, I mean, maybe not all world class, but they're trying to aspire to that, and they have a fair
yeah.
amount of. Like, so we meet a founder. It's not like this remedial course. It's
Mm,
the goal of turning excellent into unique and superlative to your
yeah.
podcast.
I
And
gotcha.
I think that's the goal of us doing. So when we work with them, we really ask them a couple questions. The first is we don't, unlike like an accelerator, and I used to run an accelerator.
Yeah,
I
those
would
are
say we don't do
intense.
any basic.
Oh, Mike, you're mute.
I don't know what happened.
Oh,
Maybe I must have touched the mute button. I apologize. The first thing is
no
we
worries.
don't tell, we have no set programming.
Mm,
And like there's no way we meet you exactly where we are. We ask when we set up our 30 days, we ask, what do you need
yeah.
with other than money? And we mean it.
Mm,
We'll work on that. And we don't charge anything.
mm-hmm.
We don't want any we don't common stock. We don't want any cash. We just want your time.
Mm,
And You like us, we like you. We'll write you a check at the end of the 30 days, even if when we pass at the end of and we don't do this with everybody. We do our first 2 meetings like every other VC. It's very intensive,
Okay,
both
gotcha.
emotionally but you like so we do our first 2 meetings like most VCs, but then we say, what do you want to work on? If you make it through that stage, we do it. And we are completely bespoke. We've done projects ranging from product-led growth to projects helping with large account sales, where we're currently in. We're doing one of our startups right now that's in pipeline, looking at replicating a local model to another city and understanding what the dynamics look like there and how do you replicate an operation. So our goal for a founder, we say, is we don't do any busy work. It's something accretive to your team, and that's why you'd work with us. And anytime you do feel like, and we tell every founder this too, it's like, if you feel like it's a waste of your time, you can leave anytime you want. We really tried to build Sidecut to be a temple to the founder. And we know the most precious commodity is time. You can write more code, you can hire more people, you can even raise more capital other than me, for sure. But one thing we all cannot make is more than 168 hours per week. So anytime we don't serve at the pleasure of the founder on it, great.
Yeah. Time is absolutely finite. And talking about like busy work, right? I wanted to get into something that you mentioned to me on our onboarding call, and you said something that stuck with me. Customer acquisition is war. I want to just dive into that wording. Why war and not just hard work? Do you see hard work being busy work? Like, how do you hone that concept?
It may be, and first, I've never served in the military, so I use this analogy with a huge amount of respect for those who have. So if you can forgive me on that, I do believe it's a version of war in that it requires hard decisions. It is, you have to be for where we invest at pre-seed.
Yeah.
There usually isn't a playbook yet. We're helping them build it. And there is no routine known pattern to success. They have a lot of theories. They have a lot of ideas of how you get to your first, let's say, turn your first 3 customers to your first 10 or 20. And that you have to think like a warrior, because there is no option. You have to, it requires you to be determined. It requires you to think about in stark data about where your battle lines are, be very sober about where you've won and where you've lost and why, and constantly reevaluate and where you redeploy your resources based on where the battle lines are drawn at the end of every day, week, month, however you measure the performance of your enterprise. And when you start losing battles, I think battles and war is a very useful construct. You can lose a battle or two here and there. You can lose, this experiment didn't work or this month didn't work. 1 or 2 is not a big deal. Once you lose 5 or 6 in a row, it's really time to think about strategy. Or to the contrary, when you start winning 5 or 6 in a row, the question needs to be why. And like a good general, maybe a better analogy is like maybe in American football or a head coach, or the World Cup is going on. Once you start winning a couple, the other thing is to like why and how do we concentrate that? What experiment do we do that? How do we accelerate? We grew 3x last week. We 2x week before. Okay, what commonalities existed? And then how do we amplify it? So the third week we're doing 10x. This idea of constantly being completely performance driven with really high stakes. And that's why I really encourage founders to think about it as a warrior. And also too, the last part on this is, unlike sport, recreation, or it's like when you're down to your last dollar, when you're down to your last customer, this is a bigger mission than, I didn't have it. Like, it's a cause worth fighting for. And this is where I think war, like there's something you believe in. And I think when there's a lot of greatness that's born out of those desperate moments. And I want to push founders to think that way, both their survivorship and for their success.
Yeah. And I really like admire that you look for these qualities inside with a founder or a founding team, right? And you one of the other things that you told me was when you're looking for them, right? When you're searching for them and you want to see if there's a partnership or a collaboration that works. You one of the things you said was you can't fake a deck. Two meetings, references that aren't on LinkedIn, stuff like that, right? So you part of your business model is really really fascinating in that you go and work with them for 30 days.
Yeah.
So do you want to talk about that and like what are you
Sure.
looking for when you're doing that? Yeah.
Sure.
Yeah.
A couple things. Look, a lot of VCs do what we call value added work, right? The
Mm,
idea is we're more than money. Most VCs do it after the check comes, right? We write you a check. Hey, look at all these cool services we have in terms of recruitment or technical prowess, or we help you get your first, corporate customer. There's a lot of things.
mm,
Our firm, we flip it. We don't get So we give advice. Most people give capital first, advice second. We flip it. We give advice first, capital
yeah.
second, and so that is unique from that perspective. There's a lot of research that doesn't belong to me.
Mm,
One firm, Ford Partners, put this stat out: 92% of VCs say they do value add work, which is a vast majority.
mm,
61% of founders say it's generally not that useful. So it's one of these things. It's like, well, we'll tell you what it's a promise we give to our founders, which is like, you don't like our advice, great, don't take our money, which is
mm,
fine because we think it's a long-term relationship you want to have with the founder. The average time that you're on someone's cap table as an early stage investor is 7 to 10 years. It's close. The average marriage in the US,
wow.
I don't know if you know this. Do you know how long the average marriage is in the US?
Let me guess. It's probably shorter, if not the same.
It's about there. It's like right now it's
Oh.
8.6. It's 8.6 years. So the,
Oh.
the
Okay.
the dad joke I tell to founders is, we're going to get married. Why don't we? Do you want to move your toothbrush in for a month or me? Move in. And we think it's the best way for us to understand if there's real fit.
Hmm.
And that's okay. And in exchange for this, of that help, it's not charity, by the way.
Hmm.
We definitely help the founder, and the founder figures it's fit for us to work together. But what we get as investors is asymmetric information. I think you were alluding to this. You can fake your way is the opposite. You can fake your way through two meetings, a deck, and a bunch of customer references that, I don't know, you like it's your son's lacrosse coach's friend who just said they do a reference call for you. And I'm not joking, I'm not saying all founders do this nefarious stuff, but it's hard
Hmm.
to understand this. So you could fake your way through that, or I
Yeah.
could miss that, or I do miss this. And a lot of my angel investing, I missed this stuff. But you know what's really hard after to fake your way through, or I get really clear signal? It's watching someone for 30 days try and grow their business.
Yeah.
And what I tell my investors is that my investors in my fund is, I get asymmetric insight. I know more about this founder having watched them do war
Hmm.
than anyone else, or at least I think it gives me an edge in service of the founder. Most investors, I always think, like, want to know more than the market. That's
Yeah.
how we make our money. It's selfish, but I kind of want to know more than the rest of the other investors in the cap table. And that's the reason we do it. That's the reason why we're willing to go through such a high cost exchange. Because I'm not going to lie, it's a lot of
Hmm.
work.
Yeah.
It is
Yeah.
a ton of work to do this, but that's the idea why.
Yeah, it's very, very, it's so true though, right? Like everybody can get information and do research online. Everybody can, to your point, and everybody can like make a really glittering resume and, pull some strings together to make it look very fancy and well recommended. So I find the idea of being able to work with the team as a very, very powerful like filter. I have a follow up to that, right?
Sure.
Do you think? Have you ever like 30 days is a lot. Like, do you know after 30 days, or could you tell like after working with them for like a week that this team could be like worth it for you, or does it have to be 30 days? And yeah, just wondering if
Yeah.
like some horror stories if you ever experienced that. You don't need to give names.
Yeah, no, great question. We 30 days is a general benchmark. There's no stopwatch starting. The goal is to have a slug of work
Mm.
that we've been able to achieve the ends, which is one, we want to be helpful and we've earned our seat at the cap table. Two, that we have some idea of whether we think when all the chips are down, we understand how this founder works. And we think that basically they can take our small little pile of money and we have conviction that they can turn to a large pile of money. We've ended, sometimes we invest at this stage historically, and we're only a year and a half into the fund. We've invested 60% of the time that we've gone through this process. And sometimes some founders have tapped out of this process, or they've taken me up on like, we're going to end this early. And there's a combination of, we've turned up the heat. And so it's ended early. It's not performative. It's value added. And then if we have conviction, then we're happy to say like, we get it. We're, and even then after the investment, we're obviously still involved. Like all my companies are on my Slack or some sort of asymmetric communication device. We have some people on WhatsApp and so what's great about this is it turbocharges our relationship even after we made the investment, because they've interacted with us as an extension of their team. I have this one company that we invested in, and we helped them build a weekly sales reporting dashboard during our time because they didn't really know how to do it. They still use that product today. And most VCs have struggled to like, hey, what's going on with my phone? And I didn't ask them to or require them to. I just tuned into the same database we built and was like, oh, I know exactly how they're doing. I just boop, 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 tune in.
Yeah.
So this idea, we want to be an extension of their team, and that we've constantly done that, and we've ended it early. In terms of horror stories, I don't think there's any horror stories, to be honest with you. Like what I would say is this: there is certainly conflict, and this is 30 days is intense. In fact, if some of your listeners want to tune into another podcast, it's called The Pitch, our investment in Stag, which makes electrified construction vehicles like Tesla for little small footprint construction vehicles. We met them on this podcast called The Pitch. It is Shark Tank for real, VCs and stuff. They documented the whole process, and Adam, the founder, was like, "Yeah, Mike is really intense," and it's because I'll push him.
No, that's good.
And they're, I've had founders let me know that it's really intense, and some people, it's kind of like, and I mean this with respect, not paternalistically. I view them as a loving parent, and I have 3 adult age children. So this is how I feel like it's with respect, but I will push them to be the best.
Yeah. Get out of
and
their
that
comfort
zone. That is what a coach should do. And usually I do it not from the perspective of like, it's not didactic. It's not like I'm telling you, I know better than you, 1, 2, 3, and 4, 5, 6. Usually what I end up doing, I've looked at this because you asked like, what does it look like? Most of the coaching is holding founders accountable in execution to the things they've said themselves. And I'll give an example to give some shape to this.
Okay.
From a growth perspective, this one particular founder said, "Hey, we're going to build this first product. It's very small, costs a couple bucks a month, and build this large land and expand strategy." And then when you went through their financial model, there was a random time from they were going to use that to launch product 2, because we had a large footprint. Product 1, we're going to sell this, and it went from 0 month, and the next month they launched, they're getting $150,000 in revenue in 1 month. And I was just like, how does that work? I hate big launches. I was like, why don't I mean? And by the way, that day was 7 months ahead of our investment, and this is a software company, not a hardware company. So
Yeah,
why
gotcha.
don't you sell this now? Like, and first, why isn't this? You want to sell this product? Why isn't it? Why is it 0, 0, 0, 150? Why isn't it 0, 10, 20, 75, 150? And why don't you
Incremental, you
test
mean?
your way into? Why don't you test your way into it? And he's like, or they're like, what, we know the requirements. And I was like, well, if you know the requirements and you know that you can sell it, cool, you write your check.
Mm.
I'm not going to write your check. Go prove it, sell it first. And we fought. You don't know, blah, blah, blah. Yeah, I was like, no, I do know. I've done this. Sell, design, build. This is lean startup. This is
Sell,
what,
design, build.
this is what Eric Greason took. And I was like, well, if you can't do that, then I'm probably out. And finally, that founder was just like, they did it. And it was some high conflict. And, they're like, you're right. You're right.
So
We should have done it. I don't know why we didn't do it sooner. And you advanced our go-to-market by 6 months. And so my answer is like, it's not like telling you what to do. I'm holding them accountable to the things they said themselves. Like, you want to launch the second product in a capital efficient way as soon as possible, right?
Yeah, yeah.
Yeah. Okay.
Instead
Well,
of
why
waiting,
aren't you doing it?
Yeah, instead of doing it in 6 months, do it sooner, and you can. There's lots of things unlocks that could happen if you do it sooner, like
Yeah.
doing it at
And there's a
smaller
lot.
scale.
Yeah. That is exactly. That is the thrust of what we look for. Another example, and I wrote about this publicly, so I can talk about this. Like our investment in Elastic Energy, which is a distributed energy orchestration platform. If you want to look it up, it's great. Elastic Energy. It's a technical play. The founder didn't know how to sell. And we helped them build a deal weighted pipeline. And his pipeline, Ben's pipeline was completely overweighted. It was just like,
What does it
we're going to
overrated
send
mean?
his pipeline's like, what's your projected sales? Like, it's like $10 million, or I'm just making up a random number that was ludicrous. It was like, hey, Ben, if you're going to sell $10 million and you really think this pipeline, why are you bothering? We write $250,000, $200,000, $300,000 checks. I was like, if you're going to send $10 million, why are you bothering me for a $200,000 check or a $300,000 check? It makes no sense. Go sell.
Yeah, yeah.
And then anyway, so we forced him to teach him how to do weighted probabilities of his pipeline. Like, not every deal is like, this one's 10%. This, anyways, to fast forward to the end of our 30 days on Slack, I asked him, and we did this coaching and sales training. He went on a sales loop. I said, how was the sales loop? And he goes, it was terrible. Like, this thing went down, blah, blah, blah. And our weighted pipeline was, X 100,000. And now it's like $250,000 less. And then he slacks me again. He's like, no, he cut it again. It's actually this much. And then he slacks me 5 minutes later. He's like, I can't believe I'm slacking a VC that I want an investment from. I've just cut my sales pipeline by X%. And I wrote to him, Ben, that's actually why I'm investing in you. Because you actually get it now. You actually understand how hard this is. And you realize how ridiculous your ingoing pipeline was. You get it. You get the war, the art of war. You understand how. That's probably why I call it war, because you think you know, but then you go in first contact with the enemy or your customers. Like, you're like, oh, crap. No, I get it now. It's like, good. Now you get it. And now we can have a real relationship between founder and investor.
Yeah.
And that's the type of founder we get with. Like, that's what excites us. The opposite of the people we don't. It's like, oh no, I know the requirements. This is a waste of time. Like, I know what needs to get built. It's in my head. I can build. Like, that's just, we can't write capital that way. And some people can, but that's not us. And that's not how we get down.
No, it's really powerful what you just said, because you're in going with the war analogy, right? You have to make decisions where there are stakes, right? And recognizing there are stakes, and then being able to adjust accordingly, because you might lose the stake that you're in, or lose your skin in the game, right? That's a very important quality to have. And I appreciate that you sharing those kinds of stories. So
We
Yeah.
call it, yeah, sorry to interrupt. We call it action oriented self awareness. That's really what we
Act,
look at. Like, you have to be aware of like what's going on, and you
yeah.
need to do something about it.
Mm, yeah, yeah, yeah. Awareness and then action on it. So yeah, I want to get into like what you and your uh, God, yeah, help me characterize this properly. You've built Sidecut Ventures alongside maybe a few other partners, and you're helping impact startups. What do you want to expand more on that, since we opened it
Sure.
very briefly in the beginning?
Sure. I mean, so I'm a solo GP, but I have an amazing team behind me. I have a right hand. The investment decisions are mine, but my gosh, like I have
Mm,
such an amazing team. My senior associate, Chad Souter, is my right hand in day to day. I have two part-time venture associates,
mm.
Francesca Colombo and Raja Miswani. They help me immensely.
Shout out to them.
And one of
Yeah.
the, yeah, and actually shout out to Chad. Chad is on his honeymoon and just got married. So special shout out to him. He's
Yeah.
getting a very well-deserved break. And we're building it. We call it family. So that's our
Mm,
internal family. And then we treat our founders like family as well. We're actually wiring our 15th investment for our 12th company. It's not
mm.
announced yet, but we're wiring it today. We've led 6 rounds. We follow. Three companies have raised follow-on. Four, actually, sorry, have raised follow-on capital. We had two companies in Time's Best Inventions, and they're like amazing
Wow.
people who are doing great things. But the best part about it is we they share trauma of dealing with me for 30 days, that there's
Yeah.
a real collective bond. And I'll tell a quick story about what it's like. At the pitch show, we had several of our founders there as alums or co-investments with the pitch fund, and they were filming in Tampa, where I've been a regular guest on the show. And we were on our Slack trying to decide where people were going to stay. And I was like, oh, you can stay here. I'm staying at this hotel. I was like, forget it, guys. Hey, I'm getting a big Airbnb. We're opening the Sidecut House. You're all staying with me. And it was like the best part.
Hacker House.
I had some investments. I had some of my investor and LPs. I had founders of, and a lot of us that we lived together,
Mm,
and it was the best. So you asked, what am I building from a community? I want to build. Everyone says they want to build a network and a community. Like, I want to build a family, and like a family, we share values, we share work.
mm,
And that's what I think binds our founders being impact, even in different areas. Like, the founders that we work with, it's not a business. It's usually a calling.
mm.
It's why you start something. And I think when you're around people who like that, who do this, that's a point of relatability and family. And then like families, like, we have a certain view of work ethic
Mm.
and what it means to be and the 30 days of that high impact intensity is a bit of shared trauma, just like your own parents or whatever. And we it's
You have
I've been
Asian
enough.
parents, you know it.
Well, yeah, I do have Asian parents. Father's Day, love you, Dad.
Yeah.
But like, look, there's definitely amount of shared trauma of the 30 days. It's an experience, and that's a good thing, right? Like,
Mm,
again, like people who go to boot camp or your first week at college or whatever. And I want to build a family, and I mean that. So it sounds so hokey and Pollyanna when I say it out loud, but if for those who know me and those who spend some time in, like, I mean 100% of it.
mm.
This fund is my life's work. I've done, I'm 50. I'm going to do this until they pry the keyboard from my cold dead hand. And the people I want to invest in and the people I want to come on this journey with me are our family. And that's, even though I'm a solo GP that people talk about it, man, it's definitely not a solo endeavor. It would be no fun that way. And that's not how we're building the firm.
Yeah, I've like been doing a little bit of research on the stats, right? It sounds like you pass on 40% of the founders after 30 days. If I'm getting the number correctly, but 60% of them are passing, that's a good number, right?
Well,
That
I
means
mean,
worth the time in
yeah, I
that
mean,
case.
and I still don't know what the right answer is. I have no in that 60 days, 30
Yeah,
days, pardon me. I don't have any like bar or curve or
yeah,
it is really just getting conviction about action oriented self awareness and
mm,
actually one of the big things about VCs that I wanted to do is I wanted to try and take as much bias as I can out of the process.
mm,
And so I don't know if it's the right bar, 60, 70%.
mm.
So many VCs invest on past signal. Oh,
Okay.
you like, and I'll use me. It's like, oh, I'll invest Mike because he went to Harvard. I'll invest in Mike because he worked at Bank of America and worked at a startup. I'll
Yeah, but
invest
you do
in,
it
my place.
differently. You do it
You know,
differently. You're an impact.
yeah.
Yeah.
Well, no. It's nothing. Well, it's
Oh,
related to that, but a lot of it's about the founder and how you underwrite their previous experience. Or I'll invest in
oh,
immigrant founders, or I'll invest in women. I do care about underrepresented. I do care about a grit. But I do think a lot. I'll invest in post-exited founders. These are parts that people will invest on based on the historical past of a founder. I want to invest in the present. Just like when
mm,
you pick a restaurant based on a chef's previous, I don't know, like, oh, they had this great review at a previous restaurant. It's like, that was last restaurant, man.
yeah.
This 30 days, I want to see what you got for this startup. And so I hope that point isn't lost on you too. Like impact is a part of it,
Yeah.
but really I want to invest in the best founder based on the performance of what you do in the 30 days,
Hmm.
not past signal, not your LinkedIn profile, not on what people said about your last startup.
Hmm. Because it's
I,
real information in front of you.
yeah, real time, man,
Hmm.
and that's what I want to invest in. I always joke it's kind of like the NFL draft camp or NFL, and yeah, if you went to like Ohio State and a 5-star, like you'll get an invitation to come to the combine, but it's not going to run the 40-yard faster for you. It's not going to bench press faster. Everything you do has got to be on the field. And I think I want to try and build a view, a way into finding the best founders and backing the
Mm.
best founders based on democratized data, signal, make it fair, reduce bias, and my own.
Yeah.
And that's actually the thing that I work really hard on is we ask in those 30 days, not just our criteria, but how we're implementing it. And
Hmm.
my team helps keep me honest. We ask each other all the time, hey, gang, are we seeing what we want to see? Or are we seeing what's actually happening? Is this the game on the field? And I'll be honest with you, it sounds easy. It's a lot harder than you think. And that's where the human judgment comes in. And that's what I think makes our process unique, that we are
Mm.
really focused on trying to drive as much bias
Mm.
out of our process as possible. It's impossible to take it all out.
Yeah.
I'm
Yeah.
human, but that's our goal.
Yeah. Yeah. But the way I'm seeing the model that you're putting together, right? It's a lot of work up. It's a lot of intensive work. I don't think from if I'm characterizing it properly, scaling this model is not the point. It's more like uh, um, really it's about getting the insights about the founder as they are raw and getting that as soon as possible.
Well, I mean, it is about scale, and people always ask me about scale. As
Yeah.
a fund, your job to your investors deliver diversification, right? So,
Mm,
we're on track. We tell our investors, here's what we think we're going to invest in, the number of startups we're going to invest in.
mm,
Roughly speaking, we're doing like 10 a year. For our portfolio model, what we've told our investors, that's plenty of deal flow and diversification. So
mm,
on top of it too, we're starting up our fund one. So we're raising and deploy, we're doing all the things. And so when people ask me about scale, like the goal is diversification, and we're doing all this stuff. And probably the hardest
okay.
time, it will never be this hard again. Um, so uh, and the operation of doing the 30 days, we'll be honest, just like you were talking to Claude when I came on, and like we're using AI to automate that. We're only going to get better. So I tell every founders, like, the goal is all of our investors. It's not about, I mean, it is and it isn't about scale. Like if we weren't hitting our portfolio benchmarks, just like in our portfolio construction looks very similar to other pre-seed funds. If we weren't delivering the throughput, the deal flow that we promised our investors, then it would be a problem. But we're crushing our deal flow. Like that's not a problem in terms of getting what we've promised the market in terms of the number of startups that we've done. So I always think about scale. I was like scale, like what? I don't want to do 80 deals. I don't, that's not, but I don't want to do it for reasons personal and professional. Like I don't think it's going to generate for our fund a better return for you. I think it'll deliver a worse fund. So everything we've driven has been driven off of portfolio construction. We've promised the market in terms of what we'd execute in the field. And so when I thank you for that question, when I was like, we're doing it.
Yeah.
And on top of it, we're, most people will deliver that construction and not lead rounds. In addition to delivering, we lead rounds. We're a solo GP, and the amount of work to do price discovery on a deal is a lot. Like I was like, what more do you want from it? We lead rounds. Most VCs in your deck have like, here are the people we invested with. Like I have a slide in my deck. It's like, well, here are all the people that actually followed our lead. And I don't know. It's like, if we're stupid, you already have access to stupid. I'm just the one doing price discovery. You already have access to stupid because these are like our co-investors are awesome. Like they're like we've had such great co-investors. And so I tell this, I know they're not stupid. So I just joke. It's a joke. I tell them, it's like, so if you have access to stupid, like you already have access. I'm just the one doing the price discovery. So why don't you write me a check? So when people always talk about scale, it's like people don't understand it. They're like, you can't replicate it. You can't replicate. I was like, and I believe people, like, and my view is like, well, a year and a half in, I was like, I don't know, like numbers all seem to work. Yeah. So that's how I think about scale. We're performing. And if that doesn't feel comfortable for you, one day, maybe if I did this for another decade, you'll get it. It's like, yeah, maybe they got it. But hopefully people figure it out a little sooner than that. We just continue to deliver what we tell the market we deliver. And that's our tribute to scale.
No, but this is you're one of the VCs that I chatted with, right, in this podcast that has this really interesting contrarian take, right? A lot of VCs would prefer doing what sounds like a variation of spray and pray, or they have these agents because they used to be ex-founders and they know where ex-founders would hang out. They would just like go and find those folks to do the investment. It's like many different strategies. Going and working with them directly is something very, very to me like contrarian, because it's choosing to like be deep in choosing to spend a lot of time on a team and building your conviction there. So
thank you. Yeah, I like to think it's additive. Like we still do all that stuff too. We have all the AI agents to do sourcing. We invested in post-exit founders. I'm an active member in the post-exit founder New York community. We've invested in first-time founder, but it's more than that. So we do more on top of all those things. And I think in the world of AI, like you can scan everything. Like data is free. People always think like, oh, sourcing and the best thing. It's like, you do miss deals, but there's a lot of data sources out there that can be normalized if you want pre-seed deal flow. We have it ourselves. That can't be our differentiator.
No, because everybody's using it.
Then what?
Yeah.
Exactly. Yeah. And then what?
Gotcha. So one thing that I wanted to like check in with you, because like impact is such a broad like, pardon me if I'm mischaracterizing it, but impact is kind of broad, right? It means you could get into financial impact, you can do social impact. Is there an avenue of or would it be right to say a thesis of impact work that you think are really exciting that are worth investigating this year or with this current fund? Or is it more
What I would say is that
founders?
yeah, no, great question. So what we have an open view in this, and what we're a returns driven fund. So our primary driver is to find out what we think. We love impact for a couple of different reasons.
Okay.
Not just because it feels good for me, but the idea of this, that one, you're solving real societal problems that no one's really figured out. Impact means that someone hasn't figured out this problem for a very long time. It's an intractable problem. So we like that. Second, that you're a mission driven founder and what you do matters to you at moments that matter. So that's why we ask this very precisely. What evil are you fighting in the world? And we phrase it very specifically like this, because if a founder can't deliver conviction
Yeah.
about evil, and we use the word evil, like
Yeah.
it has to be evil, and you can kind of hear it's like, oh, this ad tech platform is fighting evil by reducing the amount of unnecessary retargeting in the and like you hear them go through it and they're like, yeah, that's not it, right? And so that
I
is
have
the
to say it's a hard
overall.
question though. I have to say it's a hard question though, because like
Oh,
sometimes
but
if you're working in a startup and you need partners, and the partners that you could be working with could be read as the evil people.
yeah, and again, that's not for me to decide or adjudicate. I
Yeah.
don't really assess the answer. I assess your conviction in that answer. But that's sort of is my view on it. It also has had other benefits too. Just to be very frank, that we talk about to our investors about, it's led us down the road of looking at like physical AI and regulated industries and B2G sales motions where you have to work with governments, and most people find that icky, or people will invest in that just out the chute. And what this came up in our last LP call, our limited partner, our investors, and we were just like, well, everyone keeps talking about the SaaS apocalypse and how, and we've just been quietly investing in these spaces that have been resistant to a lot of these downward trends because we've just stayed true to our principles. So when you ask what's an impact and you're solving real world problems, the founder has conviction around it that is special and unique, and that combined with the fact that we always say for 30 days we want to back killers in those areas. That's how we think is a real powerful connection and powerful combination for generating outsized returns, regardless of whatever era of tech we're in, whether it is .com or slow-mo local or cloud or crypto, like solve real world problems. And if you solve real world problems, you never have to worry, and you do it in a way that constantly gets customers. I don't really have to worry that much about trends or what's hot or what, like, I always think I have a hard time with sector because I always find that founders move faster than capital. So as soon as founders, capital says like, well, as soon as capital says we only invest in this sector, I think founders have already moved on. Because we're slow as investors. I know this because I used to be a founder. Like, so that's how I think about impact. We will also not encumber our founders with like unnecessary reporting. That's not part of our thesis to a lot of impact investors. We need constant reporting about your adherence to the United Nations SDG goals or these 6 social determinants of health. And I need reporting in triplicate. I mean, and it's not to besmirch those funds. It's just not our deal. And that's how we view the world of impact.
No,
it makes you better, faster, and stronger, not reporting aspect of it. And that's why we look at it from a generalist perspective.
Gotcha. And I appreciate you like really like in the call here, really like spelling or rather like exposing or putting more light to that word and your thesis. So I'm glad
it's been a dirty word. It's been a dirty word. People think about it as like less returns or not as much money. BS. And I tell us, get at me and look at the investors that we look at the founders we backed, and they're killers. They're all killers. And so that's I'm glad to give thank you for the question, to give some time and air to that. I'm an unapologetic and enthusiastic impact investor. One prospective LP told me I should take that out of my pitch, and I was like, no, Absolutely not. Absolutely not.
Yeah, there you go. So like yeah, and I appreciate that because like I also come from an industry. I'm a founder myself, but I also we do blockchain technology, right? And blockchain in itself has a lot of like negativity to it, right? People associate it with scams or a lot of products that don't scale. So it's still a wide,
Yeah.
powerful term. Yeah.
I think there's a lot of great things in block, the provenance of supply chain and the distribution of goods. Like we've looked at blockchain companies as well. Like I think there's a lot of good that can happen in distributed ledgers. And that's the part that I think about. While we haven't done an investment, certainly looked at it. And that's what I love about looking at it through the world like that, where some technologies are taboo or we don't invest in this sector. It's like, man, if it makes society a better place and you can convince yourself of it, like we've looked at and that's what I love about thinking about it, even in the area I know you look at. Like we're pragmatists for good, man. We're not dogmatic about it. If it makes the world a better place, and some of those things we've looked at, by the way, and uses of blockchain. We're here for it, man.
Yeah, totally, and yeah, it's been a really, really fantastic conversation. I love that you were very frank about like how you operate and how you think about your convictions. So I just want to say a really big thank you for joining the call. Oh, one small thing. There might be some folks like watching this, and they might want to reach out to you, and like and talk about like investments and or if they're a good fit for the company. Or the VC, how can they reach out to you? Oh, Mike, are you there? Can you hear me?
Edward, are you there? I think maybe my internet. Yeah, I think I heard. I think my internet's crapping out. So apologies on my end if it's my connectivity.
No, I just wanted to say like, how can folks reach out to you and like if they wanted to chat about like Sidecut Ventures. And and chat with you directly.
Sure. Let me. I don't know what's happening. I feel bad. The internet's doing the thing it's doing right now.
Oh no!
If I'm back, if I understood the question, Edward, am I back?
Yeah, you are back. I can hear you. Mike, can you hear me?
Okay, I think I'm back. I'm gonna take the few windows over. The best way to get a hold of me, if you is that we're out there. If you're a founder, sidecut.vc/pitch us. That's the best way to get everything. Is on our website. Our criteria, what we look for, how our process works, or otherwise you can find me on LinkedIn. And I'm pretty good from that perspective. From a DM, I catch them and I punch in bunches. So if I miss you, let me know. Yeah. And lastly, I'm out there at mike@sidecut.vc. But that's probably the best way to get a hold of me. Hopefully that came through. I'm sorry if the internet was not cooperating.
No. It went through. Like there must have been some weird internet stuff going on, but it'll in the final recording, everything will be fine. Hello? Hello? Mike, something went something just happened. Are you back? Sorry, Mike, are you there?
I think I'm back. I'm checking my internet. It seems to be okay on speed test, so I apologize. I don't know where I lost you or what you heard last.
Oh, okay. Well, yeah, you covered where to contact you. That was like amazing. I think it's we're gonna have to call it for a time, but like Mike would love to like have you on, or maybe even have your startup self in the future episodes. I just want to say also big thank you for joining this, and like love the talks, and let's have it again soon.
It was my pleasure. I'm sorry for the technical difficulty at the end, but it was really an honor.
Yes, sir. Glad to have you.